All right, gang. Happy Thursday to you. How's everyone doing today? End of the week, endish of the week. Thursdays feel like Fridays. Tuesdays feel like Mondays. What's going on, Billy? Doing well. Doing well. Just trying to make it through. Make it through. Made it through yesterday. Yesterday was our big fundamental day. If you guys remember, if you weren't here, as a little recap, we had Bank of Canada rate statement. We had FOMC statements. We have some GDP coming out today. We also did a Trader Coffee Break episode on fundamentals as well, which is pretty interesting if you were able to attend that. We broke down some of the myths and the fears and the panic and some of the things that get traders caught up when they see big news events and they panic. We also had a cool situation yesterday where I spent, if you guys remember, I spent the entire we spent our entire first session looking for opportunities on Canadian pairs, right? I thought we would see a surprise interest rate hike, right? Yet the dilemma was that I had a position currently on Canada, dollar Canada, long, which if we saw a surprise interest rate hike and we got the expected reaction, put me in basically the wrong side of the market. Lo and behold, 10 o'clock came. We are just about to start the coffee break, and no rate hike. Dollar Canada position worked out in our favor. I was talking to Raymond on the chat, and we had a very kind of a good heart to heart just about these are situations when we talk about this is why you follow your rules, right? Could have easily got caught up in the emotions of like, man, I think this, I feel this, I predict that. But what did I tell you guys yesterday? I said I can have all these predictions that I want. I can't just base a trade off of what I feel. I got to follow the technicals. I got to stick to my plan. And yesterday was a perfect example of sticking to the plan and pays off. And obviously it's not the first time that has happened to me. I've had a lot of trades that I didn't want to be in, like per my personal opinion, but it met the rules of the trading plan. So I took it and they won. But if you're new, those are going to be some of the best moments in your trading career because they're just going to reconfirm everything that you knew you should have been doing in the first place. You are going to get, if we say patience pays, right? It's one of those things where discipline pays as well. And it really proves that you're right. And it brings confidence. And the next time that you have a situation where you have a trade and maybe you don't really want to be in it, now you can pull on that memory and say, hey, I remember last time I felt the same way and I stuck to the plan and I trusted myself, I trusted my numbers, and it worked out in my favor. So that was pretty good, right? Plan your trade your plan. Here's the daily cameo of Cameron. He's got a timer in his hand. He snuck into the room again. This is becoming a daily thing now. It's like a sitcom and the guest character comes in. Thank you, buddy. All right. Can you... Thank you. It's time to start the live room. You are correct. Give me a second, guys. He was letting me know it's work time. But yeah, good stuff. So the day was pretty decent for me as well. I had 3 trades on the table. So I hit on the dollar Canada, hit on the euro yen cipher. Did not get a follow through on pound dollar. Now I did get stopped out for break even, so it ends up being a scratch trade. But again, that kind of the theme of not hitting on the bigger trades has been a thing for me this year. Where I've hit on the small trades, hit on the patterns, hit on kind of first targets or some stuff, but haven't been able to hit on any of the bigger ones. But a scratch trade is better than a loss. Today, we've got another news event coming out at 8:30 GDP for the dollar, so we want to pay attention to that. But let's hop into the markets. Let's look at the trade of the day. There's a bunch on my radar, a lot of patterns out there, but we've been talking a lot about patterns lately. So I want to do something different. And I was tempted to do oil here, right? Oil, this is, if you remember last week, we talked about oil making not new highs, but recent highs, I think for the first time in 7 years or something like that. Looking for a pullback and then another fresh breaks. We have that setting up on oil here potentially. But I'm going to go to dollar Swiss. Dollar Swiss is going to be my trade of the day. And you guys can, well, we're a little bit advanced from where we were this morning when I first looked at it. But here's what I looked at this morning on dollar Swiss, right? So we are currently breaking a previous level of structure, working up towards a larger VS1 level, right? And there were two different ways we could look at this trade, and there still are, right? One was a potential counter trend trade at structure, right? At the time when I did my analysis, an hour and a half ago, we were holding at this level. Could be a counter trend structure trade. I didn't think there was a lot of legs on this, or a lot of room for opportunity, because we had this lower level of structure right below it. Another opportunity would be what? What are you guys seeing on here as a potential trading opportunity? Oh, tennis ball. Here we go. Yeah, a potential continuation trade, right? You can see a violation of, not a violation yet, but a potential violation, certainly one of the lower time frames, of previous structure highs. And we can anticipate that price action, if we are likely to continue higher, then we are likely to continue to these levels up here, right? Anywhere, if you want to draw up the bigger zone, anywhere between 93.24s and 93.78. We can bring in some Fibonacci love as well. We can invert one of these previous legs right here, and also see if there's any confluence. I didn't do this morning, but that's something we can always do. You have a 127 down there. So let's head down to a lower time frame here. And again, here's the previous structure highs that we are currently violating. And the question that we're going to ask ourselves is, what do we need for a continuation trade higher? Now, for me, there's two ways that I will be able to attack this, right? One way is that I would need a pullback, right? So price would have to give us a little bit of relief, right? Pull back into our potential previous level of resistance, which we'd hope now acts as support, right? This little zone right here that we drew off, a pullback and an extension, right? That is one way. Another way would be a consolidation and a breakout, right? So specifically a tight consolidation is what I would prefer. So we get some type of action where price action does something like this, right? We saw this with pound Swiss, I think it was, pound New Zealand, one of them, where let's say we put in a high and tight flag, and then we can look to trade the breakout potentially higher, right? So there were two situations or two opportunities this morning, only one right now. I guess we can technically, we still have an hour and a half on the 4 hour. We can still close below previous structure highs. I just don't see a lot of room in the downward opportunity. And this is something we talked about earlier in the week, right? I don't see a lot of room in the downward opportunity because we're trapped between two levels of structure. So if I were to get short, this lower line, this would be the anticipated level of price movement, which you can see there's not a lot of room here. And then with a lower low, lower close, we know the wick would be up here. So stocks would be up here. I just don't see how this can play out as a trade if you're looking for targets here. Now, if you're looking for targets elsewhere, whole different story. So because of that, I can already delete essentially the selling opportunity and only focus all my energy on the buying opportunity. Does that make sense? Does it make sense? Yeah, perfect. So let's go down one more time frame to the hour. There's nothing really fancy about this. This is a straightforward pullback trade. But you look here on the hourly. Again, if you're looking for a little sideways consolidation, we may see that on the hourly. With news coming out at 8:30, I would expect some type of slowdown. So that could be an opportunity for you to take advantage of the dollar Swiss. Let's go to oil since this was short and sweet. Let's give you guys one more. See you, buddy. Have a good day. But not dollar Swiss. Oil is going to be a similar situation again. So we've already had new structure highs, right? We already had the breaking close above this level right here. This was last week, right? Now we're coming up. We had our pullback, right? So this would have been, if you were able to find an opportunity in here, an opportunity to get involved and trade it longer. If not, you're looking for what we call a fresh break. A fresh break. Trading with children, right? So if we can get a fresh break, that restarts our predictive process, right? We go through a process called IPDE, identify, predict, decide, execute. If we get a fresh break, which would be a higher high, higher close of our most recent new structure high, we can then identify a new structure high, which allows us to make a new prediction that we're likely to continue higher. And basically it gives us another opportunity to look for the next pullback. Or to say we also had an inside bar with a higher high, higher close. Right in here. If I zoom in, look for my arrow key. That'll be the best way to highlight it for you. Right in there, right inside this little consolidation. Oops, sorry. Move that a little bit out of there. There we go. If you guys can see that bad boy right there. Here's your inside bar with the higher high, higher close. Here's your inside bar break right there. Here's your mother bar break if you're more of a conservative inside bar breakout artist. This would have been a nice signal too right here if we didn't have the higher high, higher close. But let's look back and let's see, okay, what's our prediction then, right? We have our prediction of what price is likely to do, right? We know the prediction process is a few steps, right? Where is price likely to go? So if we zoom out, we can see this beautiful level over here. This is our next or our previous structure high, which would be the next place we would anticipate price action going to, right? We can draw a line there, right? We can draw a line in the zone, whatever you want to do here. But that's a nice place to anticipate price action going. So lots of room to the upside here with oil. You just need that fresh break. And of course, if you want to go down to the lower time frames, a hundo. Every time you go down to lower time frames, you're going to get a zoomed in view, right? So again, looking at your highs right here. If this candle can be your fresh break, then boom, boom, look for runs, look for runs, look for runs, right? You can see a similar situation here on the hourly. Again, as you go down in time frame, you're going to get different scenarios. This is actually a busted, looks like a busted Gartley as well. But as you go down to the lower time frame, it's going to clear that picture up. Now, you don't want to chase trades, right? You want to stick to the time frames you're supposed to look at, but just giving you an idea of the different perspectives that different markets will or different time frames will have. So 2 for 1 today for top trade ideas of the day, mainly because they're pretty simple. In fact, you'll notice that trading is pretty simple. We had a good meeting the other day, and we were talking about all the rah-rah stuff that's out there, and we were talking about like philosophies and stuff like that, and we're like, man, the same stuff that worked, like from a just productivity standpoint, right? The same stuff that worked in the market decades ago is the same stuff that works now, right? Do you guys realize that? We're talking about the younger generation, how it's the shiny thing syndrome, the big fancy stuff where it's like, the instant gratification is one of it, but like they like seeing fancy stuff. They like seeing, bells and whistles and stuff that makes them feel like traders, right? And when it comes down to it, it's trading isn't really that fancy. It is about, the advanced, all the advanced is, the air quotes advanced, is just a mastery of the basics. Does that make sense, guys? Like, advanced is just a mastery of the basics. So if you want to do advanced tactics, right? I get the question, like, Akil, can you teach me some advanced tactics? And I'm like, well, let's work on the basics first, right? Because the advanced tactics is basically just a higher knowledge of the basics. That's all it is. It's really understanding the basics and being able to see and view the basics in a slightly different way than someone that doesn't have that experience. It's the same way as this, right? We all see candlesticks on this chart, right? Does everyone see a candlestick or different candlesticks on this chart? Yes. How many of you guys saw the inside bar that Orsi saw, right? We're going to slash that percentage, right? 100% of people saw candlesticks on this chart. Maybe 50% of them saw an inside bar. How many of you guys noticed the inside bar had a higher high, higher close, right? We'll slash another 50%. So now you got 25, right? It's still a candlestick, right? Did it change? It's still a candlestick. The only thing that changed is your perception of it, because you're at a higher level of knowledge where you're paying attention to things that you didn't pay attention to before, right? Just like in my own personal journey, and you guys, well, right? When you first see a candlestick, you're like, okay, well, red candle is bearish, green candle is bullish. Okay. Did you pay attention to higher high, higher close? Did you know that a higher high, higher close and a new structure high meant this or meant that? Did you know that a long wick to the downside meant this, or a long wick to the upside meant that, or a close in the middle meant this? Right? No, we didn't know any of that stuff. But is that advanced tactics? Like, not really. We're just looking at a candlestick. We're just seeing it differently. The same way I was talking, of course, we're going to get our daily sports analogy. I was talking to my wife yesterday about the Kansas City Chiefs versus the Buffalo Bills football game. And like, I was getting all excited and bubbly because I played football at a high level. So like, I know the ins and outs. Like I'm not a professional, obviously, but I like to think that I know more than the average person about football, like more about the X's and O's. Right. So I'm telling her on this play, right? You hear Patrick Mahomes at the line say, "Kelsey, do the thing. Kelsey, do the thing." And he's like, he's just rambling stuff. No, he's giving a signal. Like, he's touching his head and saying, "Kelsey, do the thing. Kelsey, do the thing," because he's giving an audible. And because of all the practice and film study that they did during the week, Travis Kelsey, who was the tight end, he knows that when he hears Kelsey do the thing, and when he sees the same thing that the quarterback is seeing, that he's no longer following the play. When he lines up and he sees this defense that he's seen before, and he recognizes how this corner is going to play him, he knows that he should be doing this. Now, the quarterback has to be on the same page. The quarterback has to see the same thing he's doing and know that he's doing this. And the yell of "Kelsey, do the thing, Kelsey, do the thing" is confirmation that they both see the thing. And he's supposed to do the thing. And he does the thing, and that thing gets him a catch, and that catch gets him into overtime. And if you watch the play, it was that catch where he fakes inside. His head's looking to the left, the ball's on his right side. He snaps his head around and catches it right away. All because they're on the same page. All because they've mastered the knowledge of what they're supposed to do, reading film and understanding defense and breaking down. So they're on another level. It's not advanced. He's still doing the same route. It's still the basics, but he's at an advanced level of it. Got a question on TradingView. Do you use harmonic trading? I do. I trade ciphers, bats, and Gartleys. Those are the three harmonic patterns that I trade. I would say the majority of the trades I take throughout the year are going to be harmonic trades, mainly because I trade three different types. This year, I've had 11 trades. I think about 6 of them have been pattern trades. Now, if you take harmonics into other accounts like AB equals CDs, and I use that in my regular analysis as well, one-to-one measured moves. Yep. Can you draw a trend line across? Sure. What time frame you want me to go to, Rain? I know how to shout goal. What time frame you want me to go to on here? Then we'll social media guys, TradingView, YouTube. If you have any questions, shoot them in now because I'm gonna boot you in a little bit. Had to get my rant in. Oh, just give an example. Oh, yeah. So same thing as the basics and the advanced, drawing trend lines. Yep. I got a question on YouTube yesterday about. It was like, I think it was Akil. He said, can you be profitable? I think it was like not identifying candles, but using order flow and Wyckoff methods instead. And I was telling him, like, okay, well, you realize it's the same thing, right? Wyckoff's methods, right? Accumulation, distribution, markup, markdown. That includes understanding a candlestick, right? Because if you look at the different methods, we just draw out kind of Wyckoff's cycles real quick, right? You got accumulation, right? Well, we're going to make this markup now. Markup, distribution, horrible drawing, and then markdown, right? So you realize that what's inside of all these levels, right? This is the macro picture of consolidation, trend, consolidation, trend. But what's inside this consolidation? It's different candlesticks, right? These candlesticks are what make up these levels. And the clues you get from the candlesticks are going to tell you or give you clues on when we're likely to mark up, when we're likely to consolidate, when we're likely to mark down. So it all works together, just using it in different ways. So cool stuff. Simple trade of the days today. Canada, not Canada. Dollar Swiss and oil. I'm getting deja vu for some reason, which isn't a good sign. But any questions before we move on to something else? And social media guys, I boot you off, but hopefully you hit that like button before you leave. And then this weekend I'll be back for a trading edge video. I don't know when. I got a busy weekend, so I don't know if it's going to be a Sunday version or a Saturday night version, but it will be here. Hopefully, maybe, possibly. But subscribe, and you'll certainly know. All right. Social media guys, you guys have a great weekend. I'll see you over the weekend with Weekend Trading Edge. I'll see you back next Tuesday, Wednesday, and Thursday for the top trading idea of the day.